This latest announcement from Vanguard, the second largest fund manager in the world, which is just behind BlackRock in terms of assets under management at $10.4 trillion as of 2024, just confirmed the inevitable. The fact that we're likely going to experience the biggest bull market in crypto history. And this is all while the CTO of Ripple and one of the earliest cryptographers in history, David Schwartz, talks about how tokenized assets and on-chain credit are bridging the gap between TradFi and DeFi, and how the XRP ledger is the perfect foundation to support this shift. So much so that even one of the largest offshore exchanges just announced that they listed RLUSD, and the trading pairs are against the Tether, Bitcoin, Ethereum, XRP, and MNT. And many talking heads have been sharing how they believe we are now in a new structure of a market cycle. In the past, we've experienced 4-year cycles. However, this time around truly is different, and it's likely we get at least a 5 to a 6-year cycle. So we're going to be covering that with Raoul Pal, a well-known influencer in the space and the co-founder and CEO of Real Vision, which is a financial channel. We'll be covering this video from a well-known finance professor who talks about our current economic structure surrounding fiat currency and how and why crypto is literally the only solution. And of course, I'll be covering the latest price action and explaining why, even with all of this positive news, the crypto market and XRP are struggling to stay above water, and some key points to look out for. And finally, if you're wanting to plan for the future in terms of your crypto portfolio and retirement, check this out.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. And in this video, we're going to be covering some really interesting news and then one of the most explosive pieces of news to date. And that's the fact that Vanguard just confirmed something that is going to push this crypto market into a mega bull market cycle, probably through the next year and into potentially even 2027. In other words, this truly is the death of that typical 4-year cycle, because when it comes to institutional adoption, there's just so much money that needs to flow into the crypto space, and it can't all happen at once. So as we get more regulatory clarity and potentially that market structure bill by the end of the year, you're going to see fund managers, pensions, retirements, heck, mutual funds starting to deploy capital into the crypto market. And again, if they were going to allocate, let's say 2 to 5% of all of their capital into crypto, which will push that crypto market cap to at least $10 trillion and will likely push XRP up to new all-time highs, they're not going to do it all at once. It's more likely that they're going to allocate over time, dependent on their own strategies. Now, that said, we're also going to see tokenized assets continue to grow. Right now, we're sitting on $30 trillion of asset tokenization. We just saw a major partnership between Ripple and some key players in the banking and financial industry. And in this latest video from the CTO of Ripple, David Schwartz, he talks about how the XRPL is the perfect foundation and fit for these key applications. Let's have a listen.
Tech is coming for finance with or without blockchain. That was going to happen. New corporates, companies like Amazon and Uber need more financial services than the current system is able to provide them. And the blockchain technologies are in the right place at the right time. I'm David Schwartz, CTO at Ripple and co-creator of the XRP ledger. I do think that DeFi, broadly speaking, meaning blockchain, smart contracts and the whole ecosystem that's being built around it, is going to take a huge bite out of TradFi over the next couple of years. The big challenge is the blockchain space is going to have to produce the services that people want from the financial system. It can't just be collectibles, and it can't just be, seeking very high reward at very high risk. But I do think that we are going to see the DeFi space, especially with the tools that institutional adoption is going to provide, with assets to things like tokenized real world assets, tokenized loan and real estate portfolios. That's going to produce the products and services that people want out of a financial system. I don't think there's a tension between institutional adoption and decentralization. I think that ecosystems are interested in layer one blockchains because of their decentralization, because of their neutrality. So I think institutions will see that the neutrality of blockchains is a positive for them rather than a negative, because I think ultimately that will be the selling point. And I think that's all going to lead to just massive expansion and growth in the space.
And so with all this institutional adoption, not just from an ETF level, which again, we're expecting an XRP ETF sometime this year. So it's more than just investing into the token itself. It's also use of this token inside of a grander ecosystem when it comes to global remittances, transactions using the RLUSD stablecoin, real world assets, and more, which is going to drive the entire crypto market into a major end of the year cycle, but arguably will last into 2026. And Raoul Pal explains it pretty well. He always talks about something called the banana zone, which consistently occurs at the end of a 4-year cycle, but how this time around we have widened. And if you look at this chart here, we're going to see in second, it's pretty visible that by now, usually we've already experienced that parabolic move, which looks like a banana. But instead, we're still in that early phase, even if it's coming in a bit late. Let's watch this.
We are now still in the early phase of phase 2. This is not a phase 2 correction. We've barely broken out. In fact, most other assets, thinking about stuff like total market cap, X, Bitcoin, and ETH, haven't yet broken. Now, think of the banana zone here. All of these previous 3 were all only one period wide, this 1 year. This one will be wider. So, which is why the market looks less parabolic at this stage. But the parabola will occur, and Julian showed you with that work earlier, and we will have a phase 2 correction.
And I think the reason that this is widening is because we do have a lot of institutions which tend to be more sophisticated investors, and they can make money on the upside, they can make money on the downside, they can apply all sorts of risk adverse strategies using options, calls, puts, you name it. And so with adoption at an institutional level, you're going to see more chop in the market. You're likely going to see the structure that we typically saw under retail investment and FOMO change. And so much so that even a finance professor talked about how after 25 years of teaching finance, he realized that the only way out is crypto. Let's have a listen.
I didn't realize that if the average year the money printer goes, call it 8 to 10%, even in the Western countries, even in the OECD nations, and the average return on the S&P 500 is, call it 9-ish%, including dividends, maybe 9.7, maybe a little less, that it means that all of the work of the S&P 500, all of the value created there is actually the money printer. That to me was startling. I mean, to think about that, the fundamental notion that in a closed system or even an open system, when you're printing money at the rate of 8 to 10% a year, everything is losing value, and the things that appear to be gaining value are not gaining value. They're just keeping you even. So you can put all your money in the S&P 500 and you're not gaining any relative wealth at all. That's a startling insight. I mean, when you really think about the entire value of the S&P 500 on average over a long period of time, not even a long period of time, is equivalent to the money printer. That's, to me, a shock. And it was a shock that said, oh my goodness, how do you think about creating wealth that is relatively greater in this economy? And you have to look hard. The other thing you can imagine is I could tell you about Sharpe ratios and diversification. I could tell you all these different things. And, you know, it's interesting. You can take a concept like diversification of risk, and at a top level, it can be a very powerful and useful tool. But if you are so focused on the mechanistic aspect of that, you can step back and miss the forest, which is in a highly diversified portfolio, it's unbelievably hard to pick up relative amounts of wealth. It is. Diversifying your portfolio, however you do it, is by and large going to reduce your incremental gain in wealth, irrespective of the Sharpe ratio. It's concentration of capital in specific bets that outperform the money printer where you actually create wealth. That was a shock to me. I just didn't get it. I didn't understand it. Even though I taught finance for 20 plus years, I'm still a professor at NYU Stern, at Stern Business School. I've taught strategy and finance for technology, media, and entertainment companies. I'm on a 2-year hiatus, but I'll be presumably going back in the spring. For 25 years, I have almost, actually more than 1,000 former students. And I still didn't get it until I'm age 58. That's the Bitcoin journey. That's the Bitcoin journey.
In other words, this is something I learned early on. The reality is, in order to protect wealth, you should diversify. But in order to create wealth, you need to concentrate. When you think about the wealthiest people on planet Earth, and we're not talking about wealth created through managing other people's money or inherited wealth, we're talking about the richest of the rich that are first generation billionaires. Virtually all of them became billionaires by concentrating their energy, and they owned the majority of a stock in any one company they built. Well, the same would be true in markets. You have to concentrate into the best performers that are going to be here, the 500-pound gorillas in the room over the next decade. And obviously, what's good for Bitcoin is good for XRP, as we've already seen loads of capital flow into XRP and arguably saw it outperform Bitcoin at the start of the year for larger gains. I expect that same type of a breakout move to happen either end of year or start of next year. And Vanguard is now playing ball as the second largest asset manager on earth, is prepping crypto ETF access for clients. So think about that. Yes, they're going to launch right away with the only ETFs available, which are Bitcoin and Ethereum. But when we get that XRP ETF that isn't an ETP, that's higher fees or in a basket of other products, we're talking just a straight up 1-for-1 spot XRP ETF. They will be offering that to their clients as well. And what makes this super interesting is the fact that Ripple's former head of partnerships, Eric Van Miltenberg, is now advising Van Eck, which is the same firm Ripple has featured at Swell. Combine that with Vanguard, and this looks like a recipe for a major bull market cycle into the next year. Now, the reality is we have virtually every major, the largest in the world fund managers in the crypto market. We already have Fidelity, we have Charles Schwab, we have BlackRock, and now Vanguard. Literally all the top 4 in terms of assets under management offering crypto. And the reason Vanguard has consistently held off is because they tend to be far more conservative. They have conservative clients, but at the end of the day, even they couldn't stop their clients from basically begging them to list crypto, otherwise they would move. And Vanguard has begun laying the groundwork and holding external discussions in response to strong client demand for digital assets and a shifting regulatory environment. So I'm assuming a lot of their well-to-do clients as well are sitting there looking at it like, it's obvious crypto is here to stay and it's going to be adopted at bigger rates, and we're foolish not to own a piece of that pie. Vanguard, you need to offer it. And the source said there are currently no plans for Vanguard to launch its own products as BlackRock has done. In other words, they won't have a Vanguard Bitcoin ETF or an XRP ETF. Instead, the firm is considering letting brokerage customers access select third-party crypto ETFs. So at any point in time, the highest quality crypto ETFs will likely be offered at Vanguard, and virtually all of the new crypto ETFs that are listed will also be offered there. And obviously BlackRock is going to, even if they don't create the product themselves, they will likely list or sell access to those products through their platform. So a move like this is likely to change the game, and it's already showing. I've showed this chart over and over and over again, but just in case you needed extra confirmation or haven't watched the prior videos, you can see that even on the daily dip down to $109,000, even more Bitcoin has left exchanges. In other words, the majority of these situations where we're seeing the market rally and then dump, rally and dump, just any level of volatility isn't going to be enough to fight the predominant trend, which is this. It doesn't matter if Bitcoin is down or up. More and more Bitcoin is being bought across the board, likely by these major institutional players and fund managers on behalf of their clients through ETFs being withdrawn and held on custodial wallets, probably with Coinbase, as they hold 80% of all ETF exposure in the market. So over time, this is likely going to hit some level where we see a banana zone, and that is going to roll over into all of the major market cap cryptos, and the strongest will perform the best. And as you know, you're on this channel because you're invested in XRP, arguably one of the strongest major market cap cryptos, currently sitting at a $167 billion market cap. Now, in terms of what I'm seeing on Ripple, or XRP, I should say, is the fact that we've been talking about this key level of about 275 over the last couple of days. And we actually saw quite a bit of volatility, as on the first dump right here, we saw a lot of wick fishing, or essentially a very large wick where dip buyers were in or stepped in order to support the price and buy this dip. Then the market rallied really hard back up to $3, only to see some resistance there and another hard slam on that sell button back down to 275. I didn't expect this volatility, but I did expect us to continue to drop back down to 275 before likely rallying back up to $3. So this key level is going to need to be supported. And what I'm actually loving about what we're seeing right here is the fact that we actually did break down on day 1 and 2 right here, just below the candle closes back in the start of September, which leads me to believe this was a nice bear trap. Not only did we get a lot of liquidations and a new lower low below this range, but this is what you would consider a bull flag. You can see that we have a series of lower lows and lower highs. And when you see this type of a situation, if you break above this upper range of the flag and are able to hold some support right here, things are going to be looking pretty good for XRP. Now, I'm not adding to a ton of risk right now. I'm not over adding to my bag just because it's a dip. It's also equally possible that we get some really crazy news into October 1st surrounding that meeting with Pete Hegseth and 800 of the top generals in the world who are flying in from around all over the world. This is like a once in a lifetime event, which can spook markets quite heavily. At the end of the day, a bull flag is a bull flag, and we have a lot of positive developments in the crypto market. So that said, if you're already in the market, I probably wouldn't be adding to a ton of risk here. And again, this is not financial advice. It's just my opinion and how I'm playing it. However, if you have yet to buy and you're looking to buy, right now might not be a bad time to add to a bit of XRP, and then just wait to see what happens between 275 back down to 268. If we fail to hold this level, I would probably get out of that position, because it's possible this thing could just continue to puke even with all of the positive developments. And again, that doesn't mean that XRP isn't being bought from a spot exchange level. It simply means that futures traders are looking at opportunities to short the market and make a lot of money on the way down in order to buy the dip here at around 240 to 245. And I'm not saying that's going to occur, which is why I'm watching this very closely. If we were to hit, for whatever reason, 240 to 245, that is truly where I'd be dip buying and hoping for this thing to pump back up to at least 275. But as things stand, if we break above this range here yet again and go back up to $3, where we touch the top of this flag, then then things are going to be looking really good for XRP. So again, if you're not in already, maybe add a little position right here. But if you're already in, I probably wouldn't be adding to your risk on a dip buying opportunity. I'd personally rather buy into strength above $3 and definitely above 312, because above 312 is where we'll be in a legitimate bull zone, and this thing is ready to fly for new all-time highs, likely up to that first target. That's a major target for me, which would be $5 and a psychological resistance. But that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out altcoinpro.com if you want access to the best platform and suite of tools, training, and resources and community and mentors on planet Earth when it comes to crypto to help you get further ahead this crypto market cycle. And I'm not going to give you the long drawn out pitch. If you've already been around, you know exactly what we offer. But worst case scenario, if you haven't already tried it, check it out. 14 days. If you don't like it, it's not for you, go ahead and ask for a refund. Thanks so much for watching, and I will see you in the next one. Goodbye.